Brace yourself for the shocking truth. China's golden rice bowls have turned into shattered dreams. Bankers who basked in their financial glory were convinced they'd be untouched by pay cuts. Except the banking crisis is worsening and the pay cuts keep lessening. Let's see what's going on. Let's rewind a bit. This whole rural banking scandal kicked off in April 2021 when 5 rural banks, 4 in Henan and 1 in Anhui province, abruptly froze the funds of their depositors. Can you imagine the shock and disbelief? It's estimated that around 400,000 customers were caught in the crossfire, their lives turned upside down in an instant. Among them is an individual who shared his plight with CNN. He had entrusted their family's entire savings, a staggering 5 million yuan or $726,000, to one of the banks involved. His story is just one of many, echoing the struggles faced by countless depositors who find themselves trapped in this dire situation. All they want is their money back, but their pleas seem to fall on deaf ears. To make matters worse, some have reported being closely monitored, harassed, or even physically attacked by local officials. It's a distressing situation, intensifying their already difficult circumstances. Since then, China has been struggling to identify the problems in its financial system and somehow save its economy. Since COVID, they've been struggling to find their footing, and we can't help but feel sorry for their struggles. Except China's finally facing its hurdles head-on and addressing them for all. China's Premier Li Keqiang just dropped a bombshell at the National People's Congress in March 2023. Despite ditching those strict anti-COVID measures not too long ago, China is still grappling with both domestic and global challenges that are putting a damper on its economy. Shockingly, Li unveiled the lowest GDP growth target in decades. For 2023, he set a goal of around 5% growth. Now that might not sound super low, but trust us, it's a big deal for China. The only time they aimed lower was back in 2020 when the economy was practically paralyzed by the initial COVID outbreak, so you can imagine the magnitude of the situation. During his speech, Li openly acknowledged the many difficulties the economy is facing. He pinpointed insufficient demand, the challenging task of creating more employment, and the financial struggles of some local governments. It's a tough nut to crack, no doubt about it. Now, here's the kicker. He's stepping down as part of a major shakeup in China's economic leadership. It seems like he's been feeling a little sidelined by the big boss, Xi Jinping, in recent years. Along with Li, a whole group of reform-minded officials, many of whom were educated in the West, will also be bidding farewell. Talk about a changing of the guard. Now, get this. The new gang coming in will have their work cut out for them. They're going to have to roll up their sleeves and figure out how to revive the economy. It's no walk in the park, especially with the historic downturn in the housing market, sluggish consumer spending, and high unemployment rates among the youth. They've got their work cut out for them, that's for sure. So, while China might have put these strict anti-COVID measures behind them, they're still grappling with a whole bunch of challenges on the economic front. The stage is set for a new era, and we'll have to wait and see how this fresh team tackles the task at hand. A lot of changes have already begun, and it's making people shudder. China's financial watchdogs are about to face a financial roller coaster ride. As Beijing gears up to tighten its grip on the beastly $60 trillion financial industry, it's going to go through some rough changes. It seems that President Xi Jinping's vision of common prosperity comes at a huge cost. Drastic pay cuts will have to be made to uphold the economy. In a daring shakeup, China's establishing a brand new national regulator to oversee all financial sectors except for securities. But here's the twist. The salaries of these watchdogs will be slashed to match those of ordinary public servants. Talk about leveling the playing field. Insiders are now spilling the beans. They whisper that officials within the new authority, which will absorb the China Banking and Insurance Regulatory Commission, could face eye-watering pay cuts of over 75%. Ouch! These agencies have been the rare few where employees enjoyed significantly higher compensation than civil servants. But no more. Gone are the days when the banking bros were dancing in their riches. Now, everyone's in peril and fighting back. A rare strike in mainland China has gained widespread attention. It's been making headlines because dozens of employees protested against an IT services vendor that works with Shanghai Pudong Development Bank. The whole thing started when an employee from the bank's wealth management subsidiary complained about a massive pay cut of nearly 70%. It's hard to believe, isn't it? This news spread like wildfire on social media, and it struck a chord with the vendor staff too. They joined in on the protest, voicing their complaints. It's a big deal because it highlights the worries people have about the economy and their job prospects in China. Ding Hefeng, a consultant at a financial advisory firm, pointed out that this protest could even be seen as a potential threat to social stability, catching the attention of public security authorities. Given how chaotic things were turning out to be, the SPDB had to address the situation. They made it clear that the protest took place outside one of their office buildings in Shanghai's finance and trade zone, and it was considered an internal dispute within the IT firm they outsourced to. Right now, the management and staff of that IT vendor are in discussions to try and find a solution and resolve the issue. Let's see how this all unfolds. The bank has now confirmed that the employee's salary was indeed slashed, but there's a twist. It turns out the hefty reduction was a consequence of failing a performance review. So it seems there's a performance-based salary system in place at the bank's wealth management unit where underperforming employees may face a drastic 70% drop in pay. But here's the interesting part. The employee who originally complained about the pay cut accepted the adjusted salary after discussions with the bank's wealth management subsidiary. Talk about a roller coaster of emotions. According to a senior manager at the bank, this performance-based salary approach is not uncommon. Other employees at the bank also experienced some minor pay cuts where their basic salaries remained the same, but their performance-related earnings took a hit. The employee who made the viral post on WeChat revealed that their monthly salary plummeted from a comfortable 20,000 yuan to a meager 6,000. No wonder this caught everyone's attention. SPDB is not alone in facing scrutiny over employee salaries in China. The entire financial sector is currently under heightened observation regarding executive pay. This increased focus follows the commitment of the Communist Party's Central Commission for Discipline Inspection to crack down on corruption, with the industry becoming a prime target for investigation. Looks like the spotlight is shining brightly on the financial world, and it's got the frauds running. China is working hard to revive its struggling economy, but authorities are keeping a watchful eye on potential economic and financial risks. They are cracking down on corruption in the financial system, which has caused a stir among the financial elite. Everyone's on their tiptoes after a prominent tech banker mysteriously disappeared. And it seems the dominoes have already started falling. China Renaissance Holdings, a well-known investment firm, has raised alarm by reporting that its CEO, Bao Fan, is missing and cannot be contacted. Bao is a prominent figure in China's finance industry, known for brokering deals for top tech companies such as Didi and Meituan. The news of his disappearance has sparked concerns about a potential crackdown by the Beijing government on figures in the finance and tech sectors. As a result, China Renaissance's stock prices have taken a nosedive. The company, however, has clarified that it does not know any connection between Bao's absence and the firm's operations. This incident brings to mind previous cases of high-profile Chinese executives mysteriously vanishing, often amid suspicions of corruption or misconduct. With sudden and shocking changes being implemented throughout the country, we'll have to keep an eye out for more breaking news. Once the strict regulations are in place, it's just a matter of time before the citizens either accept change or retaliate. And that's all we know about the Chinese banking crisis. What are your thoughts on the ongoing financial doom taking China by storm? Comment below and stay with us for more developments across the pond.